everyone, welcome to the second PUC economics class. I am Suma, economics lecturer, Gopalswamy PU College, Mysuru. In today's session, let us discuss about the various types of banks. In previous sessions, you all learnt about the Reserve Bank of India and its functions, and also about the commercial banks and their functions, and also about the monetary policy of the Reserve Bank of India and the liquidity trap. In today's session, let us see how the banking system in India are working with different types of banks. You all know that banking sector is the backbone of the economy of our country. Banking activities have now reached every remote corner of the country. The Reserve Bank of India is the chief bank, that is the central bank of India, and it is the apex one. It is the apex body which governs and monitors the financial sector in India. Reserve Bank of India frames policies, and also the monetary structure is always governed by it. It frames rules and regulations that should be followed by all the other types of banks that are there in our country. So, all the other types of banks that are in our country are established with the license of Reserve Bank of India, and therefore Reserve Bank of India is called as the Bank of the Banks. So, you all know that the banking sector in our country is well connected with all the homes in our country. Today, the government of India has introduced the Jan Dhan scheme, and according to that, every individual person is having the account in any one of the bank or in many of the banks, because this Jan Dhan account scheme was introduced with zero balance scheme. So, there is no necessity to maintain the balance in this account, and everybody is today now into the banking activities. It is well connected with the farmers, businessmen, self-employed, salaried persons, employees who are working in both informal sector as well as in the formal sector. Everyone, the homemakers are also very well connected with the banking activities in our country. Therefore, you cannot imagine a society without the banking assistance or without the operations of a commercial bank. So, everybody is dependent on banking system for one or the other reasons, because you all know the two main activities of a bank are: first one is to accept the deposits, and the second one is to grant the loans. Maybe it is a homemaker or a businessman or a firm or a big industry. Everybody is connected with banks, because either if they want to deposit some money or for save some money for future, they go to the bank only, because the bank provides the utmost safety and security to their money, and as well as if they have any need for money, they will go for loans, because banks give the loans at a reasonable rate of interest, instead of going to the private money lenders who charge exorbitant rates of interest. People, including the businessmen, everyone prefer to go for loans from bank. So, these banks issue loans to the needy people, keeping anything as collateral security which is a marketable one. Like many of they keep the gold, and as against gold they get the loans, and as against some collateral security property, RTCs of the lands are kept against the loans that they are taken. Even the crop loans are also being given, and the loans are even given to the farmers for many purposes, for buying the farm equipment. For different purposes, the farmers get loans from the bank. So, for that purpose only, in its promotional functions, RBI has introduced many banks like NABARD, SIDBI, EXIM, etc. for different purposes to meet the or to cater to the needs of different sectors, people of the society. So, like this, NABARD has established regional rural banks. So, that is National Bank for Agriculture and Rural Development, which was established in the year 1985, has established the regional rural banks under it, and many of the farmers are getting loan through this, and it is particularly established to assist the farmers as well as the people who are in the remote corners of the country. So, now let us see about the division of banks. Banks are mainly divided into two types, that is scheduled banks and non-scheduled banks. The scheduled banks are those banks which are established under the second schedule of the Reserve Bank of India Act. These banks qualified themselves as the scheduled bank by meeting the demand of Reserve Bank of India to keep rupees 5 lakhs as the paid up capital. So, those banks which are established under the schedule 2 of Reserve Bank of India are all called as scheduled banks. These banks get loan from the Reserve Bank of India, and at times if there is any emergency they even get the loan at the bank rate of Reserve Bank of India. These scheduled banks can always seek the help of Reserve Bank of India at any time. The non-scheduled banks are those which are not established by the second schedule of the Reserve Bank of India, and they even not qualify themselves as scheduled bank because they did not meet the demand of the Reserve Bank of India to keep rupees 5 lakhs as the minimum paid up capital. Jammu and Kashmir Bank is the example for non-scheduled bank. Again, this bank will not get any kind of assistance, that is all the other scheduled banks are getting from Reserve Bank of India regularly, but at very tough situation or very critical situation, considering it as abnormal circumstance, Reserve Bank of India comes to the help of the non-scheduled banks. So, these two are the major segments of the banks in our country. These scheduled banks are again divided into two. The first one is commercial bank and the second one is cooperative bank. This commercial bank has been again categorized into 5, and they are the public sector banks, private sector banks, the foreign banks, regional rural banks and small finance banks. These cooperative banks are categorized into 2. They are divided again into 2, that is rural banks and urban banks. So, now let us see about what is a commercial bank. Commercial bank is one which is established as per the guidelines of the Reserve Bank of India, and the chief activity of these banks is to accept the deposits from the public as well as to issue loans or grant the loans to the public. These commercial banks are again divided into 5. So, these commercial banks are into the society, and the major segment of the economic activity is done through these commercial banks, because Reserve Bank of India will not have direct connection or direct transaction with the public. The commercial banks are there to assist the public whenever it is required. Commercial banks take the help of Reserve Bank of India and follow the guidelines of the Reserve Bank of India in performing its day-to-day activities. The first commercial bank is public sector bank. Let us see about what is a public sector bank. Public sector banks are those who were nationalized by the Reserve Bank of India, and there are 21 public sector banks, and today at present they are being intermerged with each other and their number is decreasing. 75% of the economic activity is being taken care by these public sector banks. These public sector banks accept the deposits and grant the loans, and they maintain a proportion between both of them. These public sector banks meet the demands of the Reserve Bank of India in the areas of cash reserve ratio and also the statutory liquidity ratio. Government holds largest stake in this public sector bank. Post merger, State Bank of India is the largest public sector bank in our country. You know, recently 1 or 2 years ago, the state banks, all the state banks have been merged together, and now we have only the State Bank of India. For example, State Bank of Hyderabad, State Bank of Travancore, State Bank of MYSURU, everybody, all these state banks that were there in our country were merged together, and one bank was formed. That was already SBI was there, State Bank of India was there, and all these were merged with the State Bank of India. So, as per the guidelines of Reserve Bank of India and the central government, that is one nation, one bank. So, gradually all the other banks that are existing will be intermerged, and finally they will be merged with the State Bank Bank of India, and at last we will be left with only one bank, that is State Bank of India. So like it will be in practice in our country that one nation, one bank. So all these nationalized banks are called as the public sector banks, and the profit that they earn in the form of different types of charges they make to the customers for availing services from these banks that you have all learnt in the previous sessions, and also with the interest that they earn by giving the money as loan to the public sector banks are doing very well. The State Bank of India is one among the top 50 banks of the world. State Bank of India is catering to the needs of different sectors of the society, as well as it is even into the mutual fund market also. So whenever there is a need for money, even the governments are also will seek financial assistance from the State Bank of India, and with the help of or with the permission of Reserve Bank of India, the State Bank of India helps these state governments. So many public sector banks are there, and some among them are State Bank of India, Bank of India, Allahabad Bank, Bank of Maharashtra, Canara Bank. All these are the public sector banks. So now let's move towards the second one, that is private sector banks. The private sector banks are also established as per the guidelines of Reserve Bank of India only, but the private shareholders hold the majority of the stakes of these private sector banks. There are 21 private sector banks in our country. To name a few of the private sector banks, the ICICI Bank, Kotak Mahindra Bank, HDFC Banks, Yes Bank, and many are the private sector banks. Even the Karnataka Bank in our Karnataka is also private sector, major private sector bank. These private sector banks have gained the creditworthiness, and they have won the trust of the public, and people are now happy to transact with these private sector bank also as they transact with the public sector banks, because among this many have proved to be fail, but most of these private sector banks are taking care of the interests of the public with utmost safety and security. All these private sector banks provide all the services that are provided by the public sector banks also. So the safety and measures and the agency functions and also the locker facilities are also being provided by these private sector banks. So people have a greater trust on both the public sector banks as well as the private sector banks. So let's see about the foreign banks, the third type of commercial bank, that is foreign banks. These foreign banks are those banks which are operating in our country as a private entity, but their headquarters are lying at the foreign countries. The major foreign banks that are in our country are Citibank, CITI, Citibank, Standard Chartered Bank, HSBC Bank, Hong Kong Shanghai Bank Company Limited. So all these are the foreign banks. These have their headquarters in a foreign country, but they are operating in our country, and they are governed by the rules and regulations of both the countries. The fourth type is regional rural bank. They are called commonly as RRBs. The regional rural banks were established by the NABARD, that is National Bank for Agriculture and Rural Development. These regional rural banks were established to assist the less fortunate people of the society, particularly the agricultural laborers, farmers, illiterate people, and it is helpful for the people who cannot access the banks because they are staying in the remote corners and because they are not aware of the banking activity. These regional rural banks into the pension distribution activity, and they even give the payments through the MG Narega, that is Mahatma Gandhi Narega projects also. Besides this, the regional rural banks even provide locker facilities and also other agency functions, and even these regional rural banks are into the issue of the ATM card, debit card as well as the credit card. So everywhere you can see the regional rural banks. Most of these regional rural banks were named of the nearby river. So these regional rural banks today have a greater access towards the rural rural population of our country. These regional rural banks are providing the loans to the small farmers and marginalized workers as well as the self-employed people in the rural areas. So, the regional rural banks are of greater help and they are contributing to the economy major portion. The last one is small finance bank. These small finance banks are governed by the Reserve Bank of India as well as the FEMA. That is, these small finance banks are governed by the Reserve Bank of India as well as the Act of FEMA. FEMA. FEMA is Foreign Exchange Management Act. The small finance banks are operating in our country and they are helping to the people who are not attended by the rest of the banks. The other banks which are not catering to the needs of these people are being monitored and helped by these small finance banks. The examples are Ujjivan Small Finance Bank, the Fincare Small Finance Bank, Capital Small Finance Bank. So, all these are assisting the people by issuing the microcredits to them and also for establishment of the small scale industries as well as to even to the larger firms. So, along with this, the new category is now upcoming under these commercial banks. Majorly there were only five types of banks and a new type of bank is being emerging in these days and it is called as payments bank. Payment banks are conceptualized by the Reserve Bank of India. A maximum of 1 lakh rupees can be availed by a customer in the form of loan. Along with this, these payments banks are giving now services like issuing of debit cards and credit cards and also the ATM cards. These payments banks are also into the net banking activities as well as mobile banking activities. So, with all these types of banks, the commercial banks are very active in our country and they are supporting the economy of our country. So, therefore, lots of transactions are being happening and the money multiplier activity is being undertaken by all these types of banks. You all know that there are two types of deposits that are accepted by the commercial banks. They are the primary deposits as well as the derivative deposits. Primary deposits are those which are kept for the first time in the form of a deposit. The derivative deposits are those which are kept in the bank from the initial deposit, from the loans that is issued to the customers through initial deposits. So, both these primary deposits as well as the derivative deposits are helping the economy in terms of generation of income and therefore, these banks are of a greater importance to the economy of our country. As first I said that these banks are the backbones to the economy of our country. Reserve Bank of India along with different types of branches cater to the needs of the people of the country and it is assisting to everyone, either maybe they are literate or illiterate or educated or undereducated or a farmer or an industrialist or a businessman. For a whatever type of the necessity they have money, these banks are catering to their needs and they are providing them to improve their lifestyle or to improve their standard of living. Next one is cooperative bank. The second segment under the scheduled bank is the cooperative banks. These cooperative banks are those which are formed and registered under the Cooperative Societies Act of 1912. So, these cooperative banks were established by an act of Cooperative Societies of 1912. That is, long ago prior to the independence itself, this cooperative movement was there. So, a group of people who are managing the economic activities in that particular bank govern the activities of these cooperative sector banks. So, these cooperative sector banks are of two types, that is rural bank and the urban bank. So, you can see in every district there are district central cooperative society banks. The main intention of forming these types of cooperative society banks is to help the farmers and also the agricultural laborers. Even the people who are working in unorganized sectors and in the informal sectors are also being attended by these cooperative sector banks. These cooperative sector banks are run by the elected members of a managing committee, and they are governed by this particular Cooperative Societies Act and are bounded to adhere to the rules and regulations that are framed by the Reserve Bank of India from time to time. These cooperative sector banks are formed with an intention of no profit or no loss situation. That is, the very important intention of forming of these cooperative societies bank is to extend mutual cooperation to the needy people who are not accessed by other types of banks. These cooperative sector banks provide loans different types to the farmers based on their needs, and also these cooperative sector banks cater to the needs of the people who are into self-employment and who are into the industries in the villages. Particularly the rural cooperative banks are formed to assist the people in the rural areas to have their own self-employment through different types of loans that are available in these rural cooperative banks. So all these types of banks are there in our country, and these types of banks are catering to the needs of the country. Lots of financial changes are taking over in the economy of our country, and all these financial changes that are occurring in our country is because of the policies framed by Reserve Bank of India from time to time. So therefore, as I said, in the functions of Reserve Bank of India, the seventh function is, or the last function is, to collect the data. Reserve Bank of India collects the data related to different aspects, and based on these data, the Reserve Bank of India caters to the needs of the different sectors of the society. So these data that are provided by people help the Reserve Bank of India to locate the areas where there is a greater need for investment, and for that particular area a branch of one regional rural bank will be established in that particular area, and it supports the financial needs of that particular area. So like this, in our country today, you cannot say that any part of our country is not connected with banking system. Every remotest corner of our country is also having access towards the banking system because of the e-payments or e-commerce activities that are practiced in these days. Everybody has an access, and from Kashmir to Kanyakumari or from Gujarat to West Bengal, anywhere you can have a transaction, and within a fraction of seconds the money is being transformed from one person to another person. So these are all because of the efforts of the Reserve Bank of India towards the growth and developmental activities of it. So therefore, Reserve Bank of India is the central bank of India, and it is framing different types of innovative policies which are customer friendly and which are easily accessible by the people who are in need. So Reserve Bank of India is allowing the public to avail more and more amount of loans, and they have to introduce or invest it in the form of the establishment of a small scale industry, because today the government of India has issued a slogan called as Atmanirbhar Bharat, that is, we have to become self-sustainant and self-reliant, because instead of waiting for the imports, we have to develop the skill of manufacturing all those goods which were imported, and our exports should improve, and when our exports improve, naturally the economical situation of our country will also improve, and it contributes in turn to the development or growth of our gross domestic product or GDP. So therefore, everywhere today the skill developmental activities are being undertaken, and even the banks are not lagging behind in providing these skill developments. The skill in India, the Make in Skill India is being now practiced, and these banks, with the assistance of rural development and self-employment training institutes, it is giving lots of trainings to the different types of people who are into different types of self-employment activities. So they are imparting trainings of shorter duration, maybe it is of 1 month, 3 months or 6 months, and with the assistance of these trainings, each individual who attends this training will get a certificate, and based on that certificate they will get loans from banks. And when they obtain loans with the help of the skills that they are learnt in these training programs and the money, they can establish their own self-employment. So it is being helping lots of people who are into tailoring, screen printing, pot making, and also to the different segments of the society who are into different small self-employment activities. Such an activity is being practiced through the Reserve Bank of India with the help of all the banks that are existing in our country.